Howdy out there, folks. This is Darius Dale here to present our macro minute for Wednesday, March 9th, 2022. Starting with markets, we have stocks up this morning with Europe leading big, commodities down, crypto up big ahead of the Biden executive order. B42 macro aware that there could be some short covering there. Dollar down, global bond yields up. Global bond yields are continuing to price in the potentially massive increase in European sovereign debt supply as the region mulls options to deal with its dual energy and defense crises. Big movers this morning of WTI down 3%, that Germany's DAX index up nearly 5%, Ethereum up around 8%, and Bitcoin up around 10%. On the macro front, this morning we received a trifecta of leading indicators that suggest the food and energy supply shock is already having an adverse impact on global growth. The sharp declines in consumer confidence on Australia and Indonesia were to be expected, but the severe reduction in the growth rate of Japan's machine tool orders suggests rapidly rising prices may curtail global manufacturing activity as well. So we had Australia's Westpac Melbourne Consumer Confidence Index slow pretty sharply to 96.6 in March. That's the lowest print we've seen since September of 2020. Bank Indonesia's Consumer Confidence Index ticked down to 113.1 in February. It's the lowest print we've seen since September 2021. And then taking it to the chart here, Japan machine tool orders. You've heard this from me for many, many years. It's one of the best leading indicators for the global industrial cycle, which itself is one of the best leading indicators for global growth. So we saw the red line, which Japan machine tool orders that slowed 2,970 basis points to 31.6% on a year-over-year basis in February. As you can see in the chart, the lines are pretty correlated between Japan's machine tool orders and the OECD World Composite Leading Index Time Series. And so what 42 macro subscribers will, can cite slide 77 in yesterday's March macro scouting report to understand what the red line going down means for the blue line going down, and ultimately what the blue line going down means as it relates to your high beta risk asset exposures over the medium term. We are not done yet. With respect to today's probable range setups, overbought signal in WTI still to overbought signal in 2-year US dollar inflation swap rate, overbought signal in gold, oversold signal in Shanghai Composite Index. S&P 500 is still bearish from the perspective of our volatility adjusted momentum signal with minus 7.1% of downside versus 4.1% of upside in its probable range. WTI still neutral VAMs, minus 28% of downside with a 1% of upside in its probable range. Bloomberg Dollar Index, bullish VAMs, minus 1.8% of downside versus 0.6% of upside. 10-year Treasury yield, bullish VAM still, minus 14 basis points of downside versus 30 basis points of upside. Bitcoin, bearish VAM still, minus 24% of downside versus only 1% of upside in that range. Be aware of that. Ethereum, still bearish VAMs, minus 24% of downside versus 6% of upside. And then lastly, gold, still neutral VAMs, minus 8% of downside. And as I mentioned, is at the upper boundary of its probable range this morning. So with that, Darius Dale presenting our macro minute for Wednesday, March 9th, 2022. Best of luck out there.